Thanks again for joining me today for another episode. My name is Nick Despotidis with Keller Williams Capital Properties. Today, we're going to go through Should You Sell? Thanks again for joining. We're going through Should I Sell in 2023? And we already concluded, no, you should hold on to it as long as possible and explore these other options, like midterm rentals. Then we discussed, when are rates dropping? Soon. Wait for it, and when they do, that's the time, if you are considering selling, to sell, because that's when demand is going to be the highest. In the meantime, make all those smart repairs like we talked about. Then finally, for our third iteration of Should I Sell, is are prices declining? Unfortunately, yes. Yesterday, we had a grid meeting for investors around the DMV. We shared the November data from Bright, and real estate values were down 11%. So for owners like myself, that's not great news. Values are down 11%, where in the DC metro area as a whole is up only 1.4%, where last year they were up more than 14%. So we're noticing a cool down, and in some areas, yes, you are noticing a decline or decrease in property value. Now, what does that mean for you as an owner? It is smart to do those repairs and little smart things around the house to make sure you retain the value in your house. It also means that maybe if you purchased recently in the last 5 years, to hold on to it for a little bit longer. Either buy a vacation house so you can enjoy the leisure of another house while you hold on to this one. But don't sell quite yet if you bought in the last few years. You've lost some of what we call appreciation. So if the house you bought it for $400,000, in actuality it's worth $380,000. It's going to take at least 2 to 3 years on a, let's say, 2 to 3% appreciation basis to get that back, right? So 3% appreciation is around $10,000 a year. So we've got at least 4 or 5 years to make up for that loss. Now, remember, you did buy during the height of the market, so the interest rates were super low. So your monthly payment is really good. So your cash flow, if you rent that out, will be better than it is today. So there is a trade-off when you bought, if you bought so high, but we are noticing that there is a significant decrease in value in real estate. Will they continue to drop? Probably. Now, the reason I say that is because demand is going to increase, but not at the levels that it was in 21 and 2022. The demand is not going to be there to meet and push the prices where we were seeing 5-10% above listing. Like, I'm talking about $500,000 escalators in DC. $500,000. That's a huge number. We're seeing in this market, a lot of buyers are getting discounts, meaning that they're getting them below asking and they're getting concession where the seller is paying for the closing costs. So I had a client, they listed the property. We were the buyers, they were the sellers. The sellers listed the property for 1.2. We got it for 975. Then after all the repairs and everything like that, we came out to 925,000. 1.2 to 925. A huge drop in price because we had the leverage as the buyer. There was not that much demand out there. The sellers, if they're on the market, they need to sell. So you have to think about that. What is the timing? When should I sell? And right now, the buyers have the leverage. We're noticing also concessions. Buyers are getting their closing costs paid for in their pocket. It's great to be a buyer, not a great time to be a seller. With that same buyer, the appraisal came out to be $1,075,000. And they bought it for $925,000. So do the math, that's $150,000 of equity you're walking into day one as a buyer. As a seller, you just lost that equity of $150,000. It's a lot of money. Now there's opportunity cost. Where could you be investing that money at this time? Probably not the stock market, or maybe you wanted to go somewhere. So it depends on your motivation as a seller. So if you really need to sell, go ahead and do it, but realize that the buyers have a lot of leverage right now, and in the foreseeable 1, 2, 3 years, they will continue having the leverage. So again, if you're entering this market and need to sell, by all means do it, but if you could hold on to that and capitalize on the short-term rental options or mid-term rental options, that might be the right move for you. So join me next time. We'll be talking about a lot more topics. Subscribe so you don't miss it, like it, and comment. Looking forward to hearing from you.